Alright team, welcome back to the channel where we demystify the complex world of finance, especially when it comes to those elusive hard to borrow stocks and the potential for a short squeeze. Today, we're taking a deep dive into a fascinating company that recently popped up on our screen, CCTG Technology International Holdings Limited, trading under the ticker CCTG. This isn't just a generic overview, we're going to break down the specific numbers and dynamics that make CCTG stand out right now. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So let's talk about CCTG. CCTG Technology International Holdings Limited is an industrial sector company, specifically electrical equipment and parts. This isn't a tech giant, it's a smaller cap player with a market capitalization of around $3.03 million. The company, through its subsidiaries, designs, manufactures, and sells interconnect products across Europe, Asia, the Americas, and internationally. Think of them as a crucial, behind-the-scenes supplier in the electronics world. Show company logo/brief description on screen. Now let's look at CCTG's recent price action. Today, the stock closed down -5.5%. Over the last 5 trading days, it's seen a -10.0% decline. However, zoom out to the last 30 days, and CCTG is actually up a significant +57.25%. Job price chart highlight these periods volume-wise. Today saw about 73,800 shares trade hands, which is a stark contrast to its 30-day average volume of nearly 11 million shares. That means its relative volume today was practically 0 times average, a critical detail we'll come back to. What is cost to borrow and why it matters? Before we get into why CCTG is interesting, let's quickly explain cost to borrow, or CTB. When a short seller wants to bet against a stock, they borrow shares, sell them, and hope to buy them back later at a lower price for a profit. But borrowing isn't free. The cost to borrow is an annualized fee expressed as a percentage that short sellers pay to lend those shares. Show animation: shareholder lends to broker, broker lends to short seller, short pays fee. When this fee gets incredibly high, it tells us a few things. 1. Demand to short the stock is very strong. 2. The supply of shares available to borrow is very low. 3. It significantly increases the risk for short sellers, as those fees eat into potential profits daily. Yes, these fees can easily exceed 100%, 200%, or even 500% annualized, meaning if you hold a short position for a year, you'd pay back more than the stock's value just in fees. Why this stock is hard to borrow right now. This brings us directly to why CCTG appeared on our hard to borrow screener. Its current cost to borrow fee is an astonishing 635.7% annualized. Highlight CTB number, let that sink in. Short sellers betting against CCTG are paying an incredibly high premium. While the CTB momentum shows a -41 percentage point change over the last 5 trading days, meaning the rate has come down slightly from an even higher peak, 635.7% is still an extreme level. What makes this even more compelling? The shares currently available to borrow are a paltry 10,000 shares. Highlight borrowable shares, compare that to CCTG's estimated float of 3.0 million shares. That means there's almost nothing left to borrow. Our internal composite squeeze score, which combines CTB level, momentum, borrow supply, float, and technicals, puts CCTG at a solid 55.5 out of 100, indicating it's certainly on the radar, but not a guaranteed squeeze. Squeeze mechanics explained. So, what does it mean when a stock like CCTG is hard to borrow with such high fees and limited shares? It sets the stage for potential short squeeze. Sure, short squeeze animation. A short squeeze happens when the price of a heavily shorted stock begins to rise, forcing short sellers to buy back shares to limit their losses. This buying action further pushes the price up, creating a snowball effect. With only 10,000 shares available to borrow and a 635.7% CTB, any significant positive catalyst or increase in buying pressure could put immense stress on CCTG's short sellers. They would need to buy shares from a very limited supply, potentially leading to rapid price appreciation. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock will drop further and are willing to pay a premium to maintain their positions. Dilution risk check. One of the biggest risks to short squeeze thesis is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. Geographic PIE chart with more slices. This can significantly dampen or even negate a short squeeze because it increases the float, providing more shares for short sellers to cover with, and spreads the company's value across more shares, which can depress the stock price. For CCTG, we found no recent dilutive SEC filings like SMINUS-1, SMINUS-3, or 424B in the last 90 days, which is a positive sign for a squeeze thesis. We also checked for recent reverse splits and found none for CCTG, which is also good. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given CCTG's current setup, what should you be watching? First, continue to monitor this borrow metrics. Is the cost to borrow staying high or even climbing? Is the supply of borrowable shares remaining critically low, currently at just 10,000? Second, pay close attention to volume. Remember, CCTG's relative volume today was Xerox average. A short squeeze often requires a significant surge in buying volume to force shorts to cover. Without that strong buying pressure, even the highest CTB might not trigger a squeeze. Third, watch for price action reversal. CCTG has been down 10% in the last 5 days. Does it find support and start to move up, potentially igniting the squeeze pressure? Any positive news for CCTG Technology International Holdings Limited or its interconnect products could be a catalyst. In summary, CCTG presents a compelling case for a hard-to-borrow stock with its astronomical 635.7% cost to borrow and extremely limited 10,000 shares available. However, the very low current trading volume and recent negative price action are factors that need to be considered. Remember, while the ingredients for a squeeze might be there, it takes a catalyst, usually significant buying volume, to truly ignite one. This educational deep dive into CCTG Technology International Holdings Limited should give you a clear understanding of what to look for. If you found this breakdown valuable, please hit that like button, subscribe to the channel for more unique insights, and let us know in the comments what other hard-to-borrow stocks you want us to analyze. We love hearing from you. Thanks for watching, and we'll see you in the next video.